Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. Is my inheritance taxed? We get this question fairly often, and for no particular reason, we've been getting it a lot in 2024. We've just had a decent number of clients who unfortunately have had family members or other relatives or friends pass away, and they've received an inheritance from that. That immediate question comes up almost every time of, what's my tax on this? I received an inheritance. What's going to be the tax bill? And it's not that they're ungrateful for receiving the inheritance or anything like that. That it's just in their mind. They think, I got money. Great. What's the tax going to be? Good news is that there is no tax. And that surprises a lot of people. When you inherit money, there is no tax to you just because of the inheritance. Where taxes could happen, they don't happen too often unless you have a huge estate. But where taxes happen is at the estate level. So when someone passes away, if they're married, it's pretty simple. It generally just shifts all to their spouse. But when that spouse dies, or if they're not married, then what happens is an estate is created. And an estate is essentially just all the assets that are left. Any IRA accounts, if there's a house that goes in the estate, car, just anything. Anything goes into this estate. And if the estate has enough value, then estate taxes are assessed on it. And there's an estate tax return that is filed. And so if there's cash sitting in a bank account, that can be used to pay the taxes. But again, with the estate tax exemption limits being so high, we don't see that a ton anymore unless you just have a lot of assets. Doesn't mean there's not a reason to plan for estate taxes, because that threshold can change at any time. But the whole point that we're getting at here is for you, the person that is receiving the money, there is no taxable event to you for receiving the inheritance. Now, when might you be taxed on that money that you receive? Well, two scenarios. One, if you are inheriting an IRA account, you will pay taxes on that when you take the money out of the IRA. And inheriting an IRA means that there are required distributions. And now, with some new rules that were implemented a couple of years ago by Congress, you are required to have required distributions over that next 10-year period following that person passing away. And they just in 2024 finally finished the IRS guidance for this. This happened, I believe the law was passed late in 2019, where they made it a 10-year period. You used to be able to stretch it out over a long period of time, these required distributions. Now it's a 10-year period. It just took them, 4, maybe 5 years to actually finalize the regulations. Great job, IRS. So, and Congress for that matter, they passed the law and everybody went, well, okay, now what? Anyway, that was a side note. But if you inherit an IRA, just understand that when you take the money out of the IRA, then you are paying taxes on it, because the person who put the money into the IRA got a tax deduction when doing so. So that's one example where you would owe tax on the inheritance, just not right away. That's whenever you're taking the money out of the IRA. The second instance is when you receive these assets as an inheritance and then you grow them from there. So if you receive a stock, you get what's called a step up in basis, meaning when that person passed away on that date, your basis, your cost in the stock or in the fund was whatever it was on that day. So if that person bought it for $10 many years ago and it went up to $50 when they died, your cost basis is now $50. You don't have to inherit that $10 cost basis. If the value got up to $50 when they died, and that's your cost basis. Well, if you grow it to 70 and then sell it, you have a gain of that $20. That's what you would get taxed on. But just receiving the inheritance money, there is no tax. It's whatever you do with it afterwards that could cause some tax for you. Again, not a bad thing. It's just a very common question that we've been getting recently, and we'll see posts on it in different places on the internet. People worried about receiving an inheritance and what the tax implication to them will be. And really, there is no tax implication just for inheriting the money. It's only when you grow it, or if it's in an IRA account, when you are required to take it out, or when you choose to take it out of the IRA, that adds to your taxable income. So if you receive an inheritance, fear not. There is no extra tax to you just for receiving that money. Again, the only concern usually is around an IRA and what that's going to add to your taxable income when you are required to take the money out.